both looked, unenthusing and uninspiring in terms of numbers, because credit cost has gone up for both of them, as was expected as well. But there is the slight worry on the asset quality and some moderation in pockets of growth. But first, let me quickly run you through the key highlights as far as Bajaj Finance is concerned. It was overall a good quarter when it comes to AUM. In fact, it was the strongest AUM growth in the last, 16 quarters. There was a bit of a miss when it comes to the bottom line, but that's because of the one-off impact of the regulatory changes. However, there was a bit of asset quality deterioration when the gross NPA ratio has worsened, 2.95 versus 0.91, and the net NPA has also seen a bit of a worsening. The brokerages are a bit, mixed for now. They're talking about how, of course, there has been compression on the NIMs, but this is lower than what the street was expecting. But they are worried about growth moderating, especially in verticals like rural, etc. But talking about the comparison that you were highlighting about, well, overall we have seen that for, the growth parameters, that is the AUM growth or the loan growth, Bajaj Finance fares better with a 6% quarter-on-quarter growth versus 4.9 that we have seen for HDFC Bank. The NIMs, while HDFC managed to keep it flat, for Bajaj Finance we have seen a compression of almost 11 basis points. The credit cost has sharply kind of moved up for Bajaj Finance. It's up 32 basis points versus just up 1 basis point for HDFC Bank quarter on quarter. And if HDFC Bank saw that kind of weakness in the earnings, one is just worried of what can happen to Bajaj Finance today. But of course, on valuation, Bajaj Finance has come off quite materially. It's now close to 5 times forward earnings versus that 7-8 it used to trade earlier at in terms of the peak, while HDFC Bank is almost 2.3x in terms of the price to book. But Nikunj, I think the underlying factor remains that there is a bit of a weakness in earnings across the board of financials. There's niggling worry in the gross NPAs and credit cost.
Sinisha, you could compare Bajaj Finance and HDFC Bank with one simple benchmark, which is growth. And the growth for HDFC Bank in next few quarters and growth for Bajaj Finance, I think, is strikingly different. And Bajaj Finance, I think, is growing at a rate which, in a sense, is really enviable at that kind of a large base. B, unlike HDFC Bank, which also had one more challenge, which is that they were not getting a lot of low-cost deposit, which is their liability franchise was not getting built up. Bajaj Finance, being in the NBFC, does have a huge advantage. Of course, when there is cost of liability, a war of liability in the system for a franchise like Bajaj Finance, the cost is going to go higher because the borrowing costs are much higher than what the industry average is. I don't think there is a large bloat up I can see in terms of their NPAs. And B, this whole stress that what will happen to Mr. Rajiv Jain, and will he continue will he be in a supervisory role, or will he be in a, will he be charge of Bajaj Finance? Well, guess what, from a market standpoint, that's delightful that he pretty much would be at the helm. The stock is not very expensive, so the downside, I think, will get limited and restricted. Yes, the stock could see a little bit of, pushback, given that right now the outlook for financials and the market reaction in financials is not strong. Having said that, I think it is not, in my book or in my assessment, it's not going to be a fiasco like HDFC Bank based on these numbers.